Hello everyone and welcome to our Trader Talks videos with me, Richard Perry, market analyst at Handtech Markets, and as ever I'm talking to Steve Miley, the market chartist. Hello again, Steve.
Hi there, Richard. All well with you?
Yeah, not too bad, not too bad. The risk recovery just continues relentlessly higher, doesn't it? Anything that's of a safe haven persuasion is getting killed, and certainly we're seeing just risk on throughout markets, and that is a real feature, I think, of today's trades. Once again, we're playing this risk rally, and I'm looking at silver, and you're looking at dollar yen, I believe.
Yeah, we're going to look at dollar yen, and we've had this significant breakout in here over the past 24 hours. Markets shot higher in here. Dollar yen breaking above the peak that we posted here in May at 108.10. We've very much been confined to that kind of really between 107, 108 in here for the last 2-3 weeks, and even on a broader aspect, for the last multiple months in here between really like 106 and the 109, 109 and a half area. And we've had the market really aggressively breaking out from the triangle consolidation, taking out that 108.10 peak and technically being reinforced by a higher RSI in here. So RSI breaking to the top side as well, as you can see in the chart. And I think the other thing really to note in here is, just as you're saying there, this is kind of the final confirmation for me that we're fully in risk on mode. The dollar and the yen have both been weak against pretty much all of the majors, against emerging markets over the past week or two in here, certainly as we've got into this aggressive risk on mode. And Forex, we're seeing all those risk currencies. Aussie dollar, we focused on Aussie yen in here over the last few weeks, and Aussie yen tearing on the upside. But the dollar yen breakout in here really just reinforces to me that view. Upside for me, 109.35 is the obvious target. Yep. Psychological 110 level, which is also kind of a price objective from kind of the consolidation.
Well, 110 is basically that breakout target from, I'm taking it as a consolidation rectangle breakout, 106 to 108. Basically that target's 110, doesn't it?
Yeah, exactly. So we're looking at 109.35, then that kind of breakout target at 110. And then, I wouldn't put it past the market now, given we've been in this non-trend environment for so long, to even aim at those bigger targets up at the top there, 111.70 and 112.20 peaks.
Yeah, the only real thing that holds me back in this dollar yen view is I think that the structurally weaker dollar that I think we're going to see throughout 2020 now. Markets now, I think, taking a view that recovery is happening really in these economies. The lockdowns are coming out, and subsequently I think that the dollar doesn't have that differential that that played the stronger dollar through 2019. It hasn't got that now, so that's an issue for dollar yen, I think, broadly. But I think that we can see that dollar yen breaking out higher is, generally speaking, a real focus on yen weakness more than the dollar, and I think that 110 figure is going to be seen probably in the coming weeks, and certainly 109.35 is that key to it. I think that resistance.
Yep, agreed. And you're looking at silver, Richard?
Yeah, this silver chart I think is a really interesting chart as well, because what we have had is this, as we've talked about, the risk recovery, and you've got the two angles of silver. You've got the safe haven play in the fact that it's a physical asset, and it's a physical asset in a world of fiat currencies that are getting debased all over the place. But added into that, it's an industrial metal as well. So it plays into the risk recovery. So silver relative performance has absolutely been incredible. And I think that what we can see is a continuation of that move. And what we've had on the chart of silver, I think, is a breakout. But the breakout above 1762 is now in a little bit of a retracement in the last couple of sessions. But there's a really nice uptrend that we've got going on silver. It's flanked by the 13-day RSI, which has been a basis of a good gauge actually through the recovery when the market has been trending, and this trend comes in around that 1760 mark as well. So really good basis of support for a correction back to buy into that little dip, and I think that a retest of the move towards the February high around 1894 is likely to be seen in due course.
Yeah, agree. And then obviously that dollar weakness that we've just been speaking about plays into the silver strength as well, right?
Yeah, of course it does, and I think again that weaker dollar is a key factor through the rest of the year, and subsequently I think that plays into certainly further gains that we're going to see in silver and potentially gold as well. But I think silver is the main one that you'd play on this. I was sort of toying between silver and gold today, but silver is just certainly one of the key outperformers of these currency markets, and obviously the precious metals that we've seen.
Yep. And we shouldn't know. Should note as well. We're obviously not looking at equities today, but the equity market's tearing higher at the moment, and going into a couple of really major events we've got coming up for the balance of this week.
Yeah, the ECB is a key driver. I think that has been one of the reasons why we've seen equity markets pulling higher. I think the factor of China supposedly not in contention with its phase one agreement, the soybeans purchases are still going to be continuing, and subsequently with the ECB likely to increase its PEP tomorrow with 500 to maybe 750 billion euros worth. I think that's a real sort of boost for the euro, boost for sentiment through the eurozone, boost for equities, and again another central bank adding to further support, and I think it's going to be a positive.
Yeah. And then obviously payroll we got on Friday, always much watched. We are looking at all those jobless claims and numbers that have been coming through. So we've got kind of a good heads up of where payroll is going to be. And even though maybe not so much in focus as it usually is in some respects in here, it's still always an important data point that the whole world is watching.
It is always going to be an important data point. And the jobs data is backward looking by definition. It's April numbers, so we're looking for another 4 odd million jobs lost in April, but it'll be interesting to see how the trend moves. Can it beat that on the expectations? Because jobless claims have been coming down in recent weeks and the trend is obviously improving quite strongly, but I think it's a data point that the market at the moment just sort of is a little bit wary of and a bit unsure of, because obviously it is so backward looking and this is such a fluid situation, this COVID-19.
Sure. And then alongside that, obviously, we've got the caveats we should mention as well, right?
Usual caveats, aren't they?
Yeah. US-China tensions not going away, but the market kind of ignoring it. All the tensions within the US itself with riots and protests going on as well.
I think with regards to the riots, it just depends on how long they continue for. If they continue for several weeks, I think that becomes an issue. But just for now, they've been going on for just a week. And for right now, equity investors and risk appetite is looking past that. But I think it becomes an issue if it goes deeper into the summer.
Yeah. And as ever, we've got the backdrop of all of this coronavirus, COVID-19 coming out of lockdowns and all the potential for, maybe a second wave, although no indication of that in Europe or in the US at the moment.
Not necessarily yet, but obviously it's a long summer to come, isn't it? So.
Indeed.
Yeah, indeed. Okay, thanks so much, Steve. Good chatting with you again. And we'll speak to you again next time for some more trader talks. Thank you.
Sounds good. Thank you.